It is always wise to plan for important occasions such as saving for your children's education, planning their wedding, family vacation, owning a dream house, etc. For this, you need to save and invest so that no financial constraint comes in the way of your dreams. Tata AIA Life Insurance Money Back Plus assures you that you leave no stone unturned to add colors to your dreams. This video will analyze whether this plan helps you build a strong savings foundation with adequate financial protection. Welcome to holisticinvestment.in. Tata AIA Money Back Plus is a non-linked participating individual life insurance savings plan. In this video, let us look at the features, maturity benefit, death benefit, advantages and disadvantages of Tata AIA Money Back policy. We are also going to calculate the IRR of Tata AIA Money Back Plus and compare it with other investment return. First, features of Tata AIA Money Back Plus. Limited premium payment equal to half the policy term. Life covers throughout the policy term regardless of the survival payouts already paid. Survival payouts of up to 130% of sum assured at regular intervals throughout the term. Additional protection in case of accidental death through inbuilt accident benefit. Lump sum maturity addition to meet your needs. Option to enhance protection through riders. Tax benefit under Section 80C and 1010D of Income Tax Act 1961. Next, we shall look at the benefits under Tata AIA Money Back Plus. Survival benefit. This plan provides you with regular payouts as a percentage of basic sum assured at equal intervals depending on the policy term chosen. For option 1, policy term is 16 years. So, 20% of basic sum assured at the end of 4th, 8th and 12th policy year. For option 2, the policy term is 20 years. So, 20% of basic sum assured at the end of 5th, 10th and 15th policy year. For option 3, the policy term is 24 years. So, 20% of basic sum assured at the end of 6th, 12th and 18th policy year. Next, maturity benefit. At the end of the policy term, guaranteed sum assured on maturity along with the vested compound revisionary bonus and terminal bonus, if any, is payable, where guaranteed sum assured on maturity shall be defined as a percentage of basic sum assured depending on the option chosen. For option 1, 50%. For option 2, 60%. For option 3, 70% of basic sum assured. Next is death benefit. In case of unfortunate event of the death of the insured, the sum assured on death plus vested compound revisionary bonus and terminal bonus, if any, will be payable. This total amount will be subject to a minimum of 105% of total premiums received up to the date of death, where sum assured on death shall be the higher of 10 times the annualized premium or basic sum assured. Bonus. Compound revisionary bonus will begin to accrue annually as of the first policy anniversary. It will be payable on death or maturity or surrender. Terminal bonus, it will be a percentage of vested compound revisionary bonus and it will be payable on death or on maturity. Let us discuss the advantages and disadvantages of Tata AIA Money Back Plus. Premium paying and policy term can be chosen based on your convenience. Guaranteed benefit at regular intervals. Accidental death benefit is an inbuilt rider. A loan facility is available up to a maximum of 65% of surrender value. Riders are available to enhance your life cover. Discount on premiums for higher sum assured. Disadvantages of Tata AIA Money Back Plus. Compound revisionary bonus will be declared by the company annually and it will vary year after year. And the survival benefit does not help to meet your timely requirement. Though the maturity benefit is guaranteed, it will not suffice to meet your goals. Any investment plan needs to be analyzed based on the cash flow and the return percentage. Here in Tata AIA Money Back policy, you get regular cash flow at a predetermined interval. Also, the final maturity amounts include a bonus. Let us understand how the cash flow works under Tata AIA Money Back policy using a benefit illustration. A 35-year-old male purchases a Tata AIA Money Back policy for a basic sum assured of Rs 10 lakhs. The premium paying term is 10 years and the policy term is 20 years. The annualized premium is 1,16,200. He gets survival benefit, that is 20% of basic sum assured at the end of 5th, 10th and 15th policy year, and the final maturity amount at the end of the 20th year. The above illustration has been determined using assumed future investment return of 8% and 4% respectively. There are no upper and lower limits to what you might get at maturity, and these rates of return are not guaranteed. Future investment performance is one of many variables that will affect how much your policy is worth. In the above illustration, the IRR under 4% scenario is calculated at 2.96% and the IRR under 8% scenario is calculated at 5.7%. Even though you get regular cash flow, if you work out the internal rate of return, it is evident that the return couldn't beat inflation. Now, in this segment, we will try to match the cash flow of Tata AIA Money Back Plus in other investments for comparison, so that we can have a better idea and clear picture. The annual premium of Rs 1.16 lakhs is utilized for life cover and investment. A pure term policy for a sum assured of Rs 10 lakhs would cost 8,700 per annum. Out of Rs 1.16 lakhs, after the payment of term insurance premium, the balance amount of Rs 1,07,500 can be utilized for wealth accumulation. Here we have chosen PPF investment and ELSS fund. For PPF, lock-in period is 15 years and it can be extended for 5 years. Since the premium paying term and the lock-in doesn't match, a minor adjustment was made during the 11 to 15 year period. During this period, a minimum contribution of 500 is invested. For withdrawal, in order to match the survival benefit, partial withdrawals from PPF can be made from the 6th financial year after the account is opened. The maximum amount that can be withdrawn per financial year is the lower of the following. That is 50% of account balance at the end of the financial year preceding the current year, or 50% of account balance as of the end of the 4th financial year preceding the current year. For ELSS, withdrawal to match the survival benefit, units are withdrawn in the respective year. Here there may not arise a chance of capital gains tax because there is an exemption of gains up to Rs 1 lakh in a financial year. In the final maturity proceed, there is a capital gains tax. We have given the tax calculations here. The post-tax maturity value is taken for IRR calculation. The IRR of PPF investment component is calculated at 6.4% and the IRR of ELSS investment component is calculated at 10.88%. The returns would be even higher if we do not disturb the growth of the investment. Tata AIA money back yields lesser return because it disturbs the power of compounding, and that is for the dispersal of survival benefit. Here is our final verdict on Tata AIA Money Back Plus. Tata AIA Money Back Plus comes under cashback policy or endowment plans which provide periodic payments to the policyholder during the policy term. The survival benefit often ended up in utilizing for discretionary expenses. Moreover, the final maturity amount is non-guaranteed. The periodic payments provided by this policy may not keep pace with inflation. By investing in this Tata AIA Money Back Plus policy, you may miss out on potentially higher returns from other investment avenues. Even to receive the full benefits, you need to continue the plan till maturity. But still, why do insurance agents keep pushing this plan to you? Like many policies in the bazaar, this Tata AIA Money Back Plus pays them a high agent commission. It is essential to carefully assess your financial goals, risk tolerance, and investment options before opting for money back policy or any other financial products. Consulting with a financial advisor can help you make an informed decision based on your specific circumstances. A detailed blog post on Tata AIA Money Back Plus is available in our website, and the link is given in the description. Hope you like this video. If you have any questions related to this or any other investment option or related to your financial goal, don't hesitate to book a free appointment with our financial planners. The link to the free booking is given in the description box below. Also, will you be interested to attend any insightful investment webinar? Then feel free to register for the upcoming enlightening investment webinar. It is completely free. The registration link for the upcoming webinar is also given in the description box. If you like this video, please give us thumbs up. Also, share it with your social circle. If you haven't subscribed our YouTube channel so far, please subscribe now.